Alright, so it looks like markets are starting to breathe again, at least for now. Hey everyone, it's Thursday morning, March 26th, and welcome back to Capital Markets Quickie. I'm your host, Endrit Sella, here to break down yesterday's market action in just 2 minutes. Quick note before we dive in. Today's episode is brought to you by AMF Capital Asset Management Frankfurt. Learn more about our funds and strategies at amf-capital.de. Alright, let's get started. Now yesterday, U.S. equities actually moved higher as investors reacted to headlines suggesting a potential de-escalation in the Middle East. Reports came out that the U.S. had approached Iran with a plan to stop the fighting. And while nothing is confirmed, that alone was enough to lift sentiment a bit. So, what did we see? The Standard & Poor's 500 gained about 0.5%. The Dow Jones was up roughly 0.6%, and the Nasdaq added around 0.7%, bouncing back after the previous session's losses. Now, at the same time, oil prices pulled back, and that's been one of the key drivers lately. West Texas Intermediate dropped to around $90 while Brent crude slipped below $97. Still elevated but clearly off the recent highs. Here's the interesting part. According to reports, Iran received a 15-point proposal aimed at ending the conflict, with Pakistan acting as an intermediary. Now, Iran rejected the plan. So, we're not exactly looking at a breakthrough here, but markets are reacting to the possibility of progress. And that's really the theme right now. It's not about certainty, it's about expectations. So, even a small chance of easing tensions was enough to push investors slightly back into risk assets. At the same time, expectations for a Federal Reserve rate cut later this year ticked higher again, as experts start to factor in the potential economic impact of prolonged geopolitical stress. Bottom line, markets are still extremely headline-driven, but for yesterday at least, the tone shifted a bit more constructive. Alright, that wraps up today's Capital Markets Quickie. Join me again tomorrow morning for more market updates. See you then.